Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, February the 28th. The year's 2021. Let's talk trading. It's time for the weekly open and gap and monthly open. Yes, this is the last day of February here in the USA, but as far as the Forex charts are concerned, it is March the 1st. And just a reminder for this month, these videos are for educational purposes only. Your results may differ from mine. So let's take a look and see what's happened. So far, we've got a lot of gaps that haven't filled. The pound dollar filled its gap so far. Actually, though, let's go back and let's just shift the time frame over to the monthly for a second here. So you can see what happened last month. We came down, we crossed below the monthly open. We opened above the previous month's open, the January right there. We crossed down below it, but then we came back above it, and it ran and ran and ran. So those monthly crossovers, monthly open crossovers, are something to be aware of. As you can notice here, it did take out the monthly pivot. That's the purple dot. So monthly pivots get taken out a lot of the times, just like the weekly and the daily. So those are levels you want to be keeping in mind as you trade. So we can now go back to the weekly time frame here. And you can see we're above the weekly open. We didn't even it didn't drop down below at all. You can see we're 59 pips off of that weekly low so far. It's moved across the close. So you can see we've got a pivot here at 40179, 40179. And we'll see that pivot later. We are now putting in the opening day for the week and the opening day for the month, since it's the same day. You can see we're 345 pips above the yearly open. And as far as the day goes, it looks like we've just about covered the Friday candle here. We're only 12 pips below that candle's high. Once again, 345 pips above the yearly open. And so far, the day, the week, and the month, close above opens, all going to be the same today. So far, we have an inside bar, but I doubt it's going to stay that way. Very few inside bar trades here the first day of the month. Range so far, we've got 3 at 100 or better. Pounds already at 71. You can see it took out the pivot. We had gap down, trigger long, took out the pivot. So that was not a bad trade there. As far as the rat zone, you can see the red rats have feasted a couple of times. The green rats didn't have a chance because there wasn't enough range down here. But now we do have enough range at 71.4 at the moment. But once again, at 59, let's see, we've got a 71 pip range. We'll have to see what the average range is when we get to those charts. I would look for the price to expand a bit. I could be wrong. Weekly pivot, 1.40179. Look for that to be taken out. Maybe not today, maybe tomorrow, maybe not at all, but that's trading. Daily pivot, we've already taken out. See, we had a missed pivot 1 day ago, and then one 14 days ago, and one 16 days ago. Wick zone, technically it got into that lower wick zone and then just is shot right out of it. Okay, the ranges that we were talking about. You can see 71 is only at the 8th percentile. Um, the past 3 days we've had some really nice ranges, but 4 days ago we only had a 63. I would imagine once again this would get outside of that range. If since we've been talking about the months, let's take a look at the month. 71 pips so far. Last month, 675 pips was 80 percentile. So that was a nice run, a nice run. But if you look at this, the high minus the previous high, it shot way above it by 480 pips. And then the high minus close last month was 311 pips off of that. And the close minus the low was 365. So trading away from the extremes proved to be profitable. Once again, just simple trades, no esoteric math being involved at all. And we look at this simple chart here. We usually use this, the Walmart lines on the 1 hour chart. Today, if you got in early and took the break at the 40, you were paid off big time. And I think by the time the 2nd hour rolled around, the spread had probably calmed down. If not, you can see here there was another nice 10 pip move when it broke. And see, once again, it got into that 40 zone, which I like to refer to as the launch pad, and it launched. And the high looks like was 98.5, 139.98.5. Nice move on the pound there. I'm trying to think over the weekend if there was any questions. Just to let you know, I did send out batch 3 of the donationals. I'm going to be really busy this week, so I thought if I didn't get them out today, you guys would have to wait a whole week. And I figured you probably would rather have the indicators now. So I took this morning and put some finishing touches on them and wrote the documentation for you and emailed them out to those who donated. And we've got some more order block indicators and also the price near indicator. And I'll do a video on those indicators because I think some people are going to want to know about the inputs, and they're going to want to know how to use them to make pips, because that's what this whole game is about, is making pips. Let's see, last week we had some nice comments from you traders out there. I appreciate them. You guys like Walmart when he came back when we were talking about, some tactical trading things. And it still gets down to just, keeping it simple. And you guys have seen these screens before for the most part, unless you're new here. We try not to do anything complicated. So, first thing we stress is the risk management. Don't lose any more in any one single trade than you're willing to lose on the trade. If you can just do that one thing, you'll stay in the game much longer. And, usually you are the biggest problem you're going to face. And you being, your brain, you're going to, have all these different fears or regrets. It's going to mess with your mind. And you just have to basically try not to be emotional at all and just think of it as like a job. It's like, okay, I see the trade, I take it, I either win or lose, either my stop gets hit or I take profit. But there's just no reason to get upset and experience that pain, because the pain's not coming from the market. It's coming from your reaction to what the market is doing. So if you're up 3 pips and you don't take them, and the next thing you know you're down 7 because the price flashed on you, don't be mad. And then if you're up 3 pips and you take it and the rocket runs up another 10 pips, don't be mad. You got 3 pips more than what you started with. And those little 3 pip gains add up. 3 times 3 is 9. 9 pips a day. You make 9 pips a day and you just do it steady and you keep your risk management intact and you do it over and over again. Your account's going to grow. It cannot not grow if you're making 9 pips, a positive 9 pips a day. But if you get distracted and you start reading some of those forums and these guys making these 100 pip trades, yeah, but you know what? They might have 100 pip stop loss and they might be trading, a dime a pip. If you tried doing that with $1, you might really eat into your account. $1 a pip, not mention $10 a pip or 50 or 100. And something I saw interesting. Some guy said something to the effect that if you've got this leverage and you're actually moving $1 million in the market and you're only making like $20. I mean, think about that. You moved $1 million in the market and you made $20. That's kind of a funny thought when you really think about it. But on the other hand, if you have $1,000 account and you make $20, you just made 2% on your account. Yeah, $20, that's chump change, right? But in some parts of the world, that could be a monthly salary. Point being is that if you do that, make $20 on a $1,000 account, when you grow that account to 10,000, you'll be making $200. If you grow that account to 100,000, you'll be making $2,000. So somewhere between those two numbers, 10,000 and 100,000, you're going to be putting away some serious money. We're not talking Lambo money, but we're talking money that could definitely make things easy on you and your life. You can, take nicer vacations, live in nice places, eat better food, have time. You can buy time in the sense that instead of you doing some chores, you could pay somebody to do the chores to free up your time. So that's just different ways of thinking. Then again, some people like doing certain chores like gardening and cooking and all. So you can't determine your success based on somebody else's ruler. You have to decide what your success means to you. So if somebody's making fun of you because you're making 1 or 2 pip trades, just remember what they think of you, their opinion of you is none of your business. So don't let them get into your head. It's really, really, really that simple. Because there's plenty of people out there, they relish in the fact of, trying to tear somebody else down who's, putting themselves out there, trying to help other traders, and somebody else comes along and says, blah, blah, blah. There's a lot of that going around. I've been dealing with that mess since what, 2001 or something? 20 years in this online game. So it's just something that, I've learned. So I don't sweat it anymore. These guys want to say stuff about me. It's like, you can just look at my body of work and compare it to their body of work. There's no comparison. I'm not saying that there's not other people out there that don't know more than me, because I'm sure there are. They make more, they know more, and there's people who probably are better programmers than me. I tip my hat to them, and hopefully, I can get a peek of their code. Maybe I can learn something. So, that's the whole idea here, is to learn something. Every day in trading, you should be learning something. Or every week or every month, you should be making those gains. That's how you get better. You learn. And if you don't try anything new, then you're not going to learn anything new. So that's one of the reasons why I try some of, these different methods like the order blocks. Because of the order blocks, I've stumbled onto something else that I think is even better than the order blocks. And I'm still working on that. So those indicators might come out later this year. But anyway, fellow traders, I hope you had a great February. I hope you have an even greater March. And I just want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.